Hey traders, Todd Gordon here with TradingAnalysis.com. This is for CNBC's Trading Nation. Traders, we have a tech wreck in effect. How long will it last? Let's look at Apple to figure out just how far we might fall. So the first chart we're going to look at is Apple, and that is in the red and green candles. The NASDAQ tracking stock is in the white line chart there. That's the QQQ. First thing you're going to notice is Apple has struggled up around the $156 to $157 resistance level. It's made a double top over the last 2 months. Notice what the NASDAQ QQQ has done. It's continued to make higher highs. Apple is showing us it's a relative underperformer in the uptrending stock market time. Now, while the uptrend is in question, we'd expect the underperformers, Apple, to lead on the downside despite the heavy action in the semis right now. But I think Apple is a little bit more significant in telling as to where the overall market we're going. Apple is also struggling with the downgrade here, so that could be part of the reason. Now, looking at the Apple chart by itself, let's take a look at where we would draw the parallel lines to define support and resistance. So first thing I'm going to do is draw a line connecting the tops. Okay, that's going to define the uptrend resistance points, or the ceiling. From there, I'm going to find the lowest point, or the lowest swing point low in the chart, and draw a parallel line. And I'm just going to do my best to draw a parallel line right there. And you can see, based on the angle of ascent, Apple will have a key test of support right around the $140 mark. Now, it's possible that Apple holds that support level and continues on its merry way. Else, if we break through 140, that could be a greater issue, and this tech sell-off could extend further. So heading over to the options market, what do we want to do? I want to take a trade to get down into that decision level. I don't know if it's going to break. We can't foretell the future, but let's trade down to the decision point, hopefully make some money on the short side, and then observe what happens once we arrive. So I'm going to go out just to the, we're going to go out, we only need about 26 days. So we're going to go on those July 7 weekly options. I'm going to go ahead, I'm going to buy the $145 put. I'm going to sell the put that corresponds with our downside target of 140 as we're trading $144.69, 70 cents. So altogether, we're going to pay $1.86 or $186 per contract per option spread with this $5 wide spread. So as the P&L graph shows us, our max loss on a debit spread is always $186. Break even will be our long strike minus premium paid, so right around $143 and change, $143.15 depending on your fill. And then of course we'll max out down at that technical objective right around 140, and that'll give you a profit of about $315. So let's go ahead and put the trade to work. 185, that trade is now working. So we're going to use the 50% give back rule here, guys. If the premium paid gets down to about 90 cents, that's going to be half the premium loss. Let's go ahead and cut the trade and simply move on to the next trade. And it looks like the uptrend is still intact. Otherwise, that key test of 140 is what we're shooting for. For CNBC's Trading Nation, I'm Todd Gordon. Good luck on that trade. Be sure to follow us at Trading Nation on Twitter for updates on these positions, as well as all the other markets our traders are watching, and we'll see you guys in the next video update.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.